Hi, this is Nate McGee with MicroQuant, bringing you the value charts video of the day for this Tuesday, July 30th, 2013. What I have pulled up here is a 2000 tick chart for the pound US dollar. And I wanted to bring to your attention this concept of a momentum inflection. Now, a momentum inflection is an interesting sort of strategy to follow, and what it is basically whenever we have upward momentum or downward momentum, sometimes we have a slight dip before it continues to head back in the same direction. So I have a few of these bars circled here, and I want to show you what I mean. So first, I'll pull up this one right here. You see that circled? If you look at this line that we have drawn all the way down to the bottom, you'll see that there's a dip right here. This is the momentum inflection we're talking about, because price still continued to head on up. Now if you look right here, bring it all the way up here where it's circled, the concept is we want to take a long once price, the next candle, price breaks the previous candle's high. So the high right here is at 52.37, and this one right here is 52.38. So we could have taken a long right there, and you can see prices continue to head on up. So it's a slight momentum inflection. I mean, if you took that trade right there, 52.37, all the way up to say this high right here of 53.83, could have taken out a huge move. That's right around 150 pips, 146 pips, right? That move alone. This is on a 2000 tick chart, remember? Say you missed that one. These things happen all the time. I mean, there's one right here. Could have taken that, and it could have gone up. Now, how you want to manage your stop is, as soon as you take a long right here, you want to put your stop right below the previous bar's low. So you would have put a stop right here. Another good example is right in here. We have one. You can see this is coming toward the end of the move. Right here, this dip, and then as soon as price breaks it, the high is at 53.37. You could have gotten out right here at the top again at the 53.83 mark. That would have taken out about 50 pips, well 46 pips as well. And I mean, you could have still stayed in if you wanted to. If you didn't think it's going to end right there, you could have gotten out toward this bearish divergence that we have right in here. But you're still looking at a nice gain. The high over here is 53.75, and you would have gotten 38 pips out of it. You could have gotten in again, right down here, where we had a slight one, where it dropped just barely, and then it continued to head on up. And another one, a good one right over here as well. You can see this drop in price right here before price continued to head on up. I mean, the high right on this one as well is 53.17. So you could have gone in right at 53.17 once it broke it, and ridden it all the way up to this high of 54.33. That's 116 pips moving up right there, putting your stop right below this low, and you still wouldn't have got stopped out. The same can be said on the other side too. You can find momentum inflections on the downside as well. So like right here, you can see we had a slight dip in momentum, and then price continued to head on down. So you could have taken a short right as soon as price broke that low with your stop right above this high, and you can see price never even reached that high again, and you still could be in it. If you missed the first one, you could have gotten in again right here. Another nice dip and inflection, and then price just continued to head on down. So that's what I want to bring to your attention today. It's a strategy of momentum inflection. These things happen all the time, so keep your eyes out for them, and you could turn in some nice trades off those sort of inflections. That's it for me. Bye. Never miss another value charts trade. Go ahead and subscribe to this YouTube channel to see more video of the day and trade of the day videos. Again, this is Nate McGee reminding you to trade smarter, not harder, and as always, trade with confidence.